Hi everyone, let's take a look at problem or exercise 13-10, which deals with a demonstration of income statement categorization. In 2005, Random Merchandising sold its interest in a chain of wholesale outlets, taking the company completely out of the wholesaling business. The company still operates its retail outlets. A listing of the major sections of the income statement appear below. A would be income or loss from continuing operations. B would be the income or loss from operating or the gain or loss from disposing of a discontinued segment. C deals with extraordinary gains and losses, and D represents cumulative effects of changes in accounting principles. Now, we're asked to indicate where each of the following income-related items for this company would appear on its 2005 income statement by writing the letter of the appropriate section in the blank beside each item. So we'll put the information right in here, and why don't I just color this so we know where we're going to be putting the answers. Okay, so the first item is net sales. Well, that should be easy. Net sales is part of income from the continuing operation, right? Let me put my cap locks on. And that takes care of item 1. Item 2 is the gain on the state's condemnation of the company property net of tax. Well, we should understand that a state coming in and condemning our property is very infrequently and occurs very infrequently and is very unusual. So that would fall under extraordinary items. That's not something we would expect to see year in and year out. Item 3 is cost of goods sold, and again, that's part of the normal ongoing continuing operations of the business, in this case, the retail operation. Item 4 is the effect of changes from Fifo to Lifo. That means we need to compute the cumulative effect of changes in accounting principles, so that would appear as D and would appear certainly near the bottom of the income statement. Item 5 is income taxes expense, and income taxes expense is part of the normal determination of income loss from continuing operations, so that too would be an A. Let's look at item 6, depreciation expense. Same answer here. Depreciation expense on our retail operations is the normal expenditure we would expect, so it would flow into the income or loss area from continuing operations. Number 7 is gain on the sale of a wholesale business. Well, now we're dealing with the income or loss from operating or from the gain or selling of related to the disposition of a discontinued segment. So we've isolated discontinued segments, so that would be a B for number 7. Number 8 is the loss from the wholesale business during the year that we've determined that we're discontinuing it, and again, that also is segmented as part of discontinued operations, so that too would be, the correct answer would be to place a B next to number 8. Now, then we have salaries expense, and again, nothing new under the sun here. Salaries expense is a normal amount we would expect to incur from the operation of our retail outlets, which is our ongoing business. So there we've worked through some categorizations of certain income statement items that we would have for a business, and a business that incurred changes in accounting principles, discontinued operations, continuing operations, and also an extraordinary event.